heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow. Side by side this week, this is Bloomberg Technology.
Coming up, full EV coverage ahead. Tesla, it drops after deliveries fell way short of expectations. Meanwhile, Rivian beats production estimates. We'll discuss.
Plus, we'll get the outlook for technology stocks after Apple posted one of its worst quarters relative to the S&P in over a decade.
And we'll take the pulse of the IPO market. That's as Microsoft-backed Rubrik's IPO filing shows growing revenue, but still losses. Details to come, but first let's check in on these public markets. And we're having the worst day in about a month at the moment on the key benchmarks. We're seeing tech in particular under pressure, off by 1.5% on the NASDAQ. This as we see once again a fear of the fact that US economy is just too strong. The Federal Reserve is not going to be cutting rates at the market anticipated rate, and therefore we're likely to see just a pullback in some of these more frothier names. 10-year yield, though, also pushing higher on the back of the fact that we're going to see rates staying higher for longer potentially. And Bitcoin, of course, risk asset under pressure as we see the rest sell off. We're off by more than 5%. That's as also we see the inflows perhaps dial back from those crucial spot Bitcoin ETFs. But Ed, there is one stock that you are watching.
Yeah, and that is Tesla. And Tesla deliveries missed expectations. In fact, that's an understatement. Tesla's deliveries, 388,000 or so in the quarter gone, was the biggest miss against Bloomberg consensus on record. Where did we get this analysis wrong? The stock is down around 5% in the session. In pre-market, it had fallen as much as 7%. What are the factors that are happening here? I want to bring in Stephanie Valdez-Streety, Director of Industry Insights at Cox Automotive. And Stephanie, Tesla said this is supply-side related. 3 factors. They diverted shipments because of the situation in the Red Sea. They paused production in Berlin because of what they call an arson attack. And they relaunched a refreshed Model 3 in Fremont, which impacted the production ramp. Why has that impacted deliveries to this extent?
Yeah, good afternoon. Thank you so much. Yeah, Tesla's definitely the news today. Yeah, we had forecasted that we're going to see decline in Q1 for Tesla. And if you look at, just as you mentioned, they have the 2 models, the Y, and the S that are really like carrying them forward, but they don't have any new product recently. And hopefully with the Roadster 2 coming in 2026, that's going to help them. But if you look like any automotive, new product really drives sales. And so I think for Tesla, they're in that in-between waves that they've mentioned on their last call of where they had, high volume products, and now they're waiting to launch this new one that's going to be more affordable, which the industry really needs. So I think Tesla has a lot of work ahead of it. And I think when they have their earnings call, I think it's going to be important for them to really lay out what that plan is to execute on that.
Stephanie, love how you're going there on the demand side of the equation. I know you focus predominantly on the United States. And interestingly, we talk a lot about, some of the competition coming from Chinese makers, BYD in particular. And you see also Xiaomi, for example, launching a new EV where on the first day of sales online, it looks as though bookings are north of 90,000. When you're looking at the US demand side, how much is the competition an issue for it? Or is it really the supply side, a lack of a new product that's the driver here?
I think it's the competition. If you look at last year, it was a record year, 1.2 pure battery electric vehicles. This year, this quarter, we're expecting 15% year over year. But with that, Tesla, as you saw, is, we are expecting like a 3.2% year over year growth. Meanwhile, there's some other brands are going to see significant increase Q1. The results are going to come in the next week or so we'll have that in our EV report. But some of the other products that are going to become popular, I think, are really creating more competition for Tesla. And I think that's going to continue. Tesla's finally having to compete with these other brands that are offering different styling, product range that are competing with the Tesla models. So I think definitely that's going to be a driving factor for Tesla going forward.
Caroline, I'm just going to recap the numbers because I slightly misspoke at the top. So Tesla's first quarter deliveries were 386,810. The estimate was for 449,000. As Caroline knows, Stephanie, I was one of the people that leased a Model Y in the penultimate day of the quarter. I did so because the incentives on offer, both those from the federal tax credit and those that Tesla did of its own accord, were just too good to pass up. Then on April the 1st, Tesla raised prices again, and they said they were going to do that. And what it's got me thinking about now that we have the first quarter number print is is there a market anymore, particularly in this country, for a $40,000 to $50,000 EV? It seems like that's gone, and everyone is waiting for the $25,000 EV to finally materialize.
Yeah, you hit on it. If you think about EV adoption, like our research consistently shows that price is one of the major barriers, along with infrastructure. And at the end of February, the average EV was $52,000. If you look back 2 years ago, the price premium in EV was about $17,000. So in February, that gap narrowed to about $5,500. But still, it's expensive, right? And so I think portability is key to adoption, and I think we're going to need some more of those vehicles that are at that different price point. And I think as we start to see more used EVs enter the market, that might be able to accommodate some of that price point barriers.
Rivian is another interesting one. They beat expectations on both production and deliveries, though they kind of set the bar low, which has been kind for the quarter. What do you make of a name like Rivian, where they offer the big boxy EV that Americans love? They like light truck category, they like big cars, but they seem still like a niche player.
Well, any of these new entrants into the EV market, they're struggling with, cash, trying to build up their brand. They don't have any ICE vehicle revenue to support that. But with Rivian, I think the unveiling of the R2 created a lot of energy for that brand. And I think it's going to be key if they're able to execute on that. But that R2 is going to be critical in terms of giving them entry into this high volume segment and more affordable volumes, and hopefully being able to turn a profit over long term. So I think Rivian's on a good path, and I think definitely that R2 unveiling helped ignite some of that excitement about the brand.
Stephanie, we talk about the incentives offered from a federal perspective. At the moment, is the biggest competition to an EV a hybrid, just because we're still so worried about infrastructure?
Great question.
Yes, I think we're going to continue to see gas hybrids increase in sale, because if you think about a gas hybrid, there's nothing different. Like you said, it's the same experience as driving an ICE vehicle. You don't have to worry about charging, infrastructure, any of that. So I think we're going to see that, because it's a good gateway as we try to navigate to full electrification. Hybrids definitely a good option, and we'll probably start to see more plug-in hybrids as well, since that's a good gateway as well.
Stephanie, is policy support working in this country?
I definitely think it is. If you think about the incentives, I think that $7,500, as we know, with the changes in the regulations, some became ineligible, but I think that definitely has helped with adoption. And I think one of the things that changed with the point of purchase, now that you get that $7,500 at point of purchase, I think that is also attractive. But I will say that I think the incentives are very confusing, and some consumers aren't aware of them, and confusing what is eligible, what isn't. So I think there needs to be more education around just EVs in general, around the incentives, the value of an EV, what's it like to drive an EV, that total cost of operation is going to be important as well. So I think we have a lot of work ahead. In January, one of our key messages was for EV, it's going to be the year or more. So we're going to see more sales, but we're going to see more bumps. We're going to see more incentives, more price cuts, but also I think we're going to see the industry build more sales muscle and really selling these EVs to that next wave of adoption.
More transparency, please. Stephanie Valdez-Street, we thank you so much, of Cox Automotive. Meanwhile, coming up, Erica Clow is going to be joining us, Jim Jennison Technology Fund Portfolio Manager. We've got a deep dive on what's happening in the broader markets today with a big chip sell-off, and she's got a keen eye on some of those names. Ed, what are you watching?
Well, let's go back to Xiaomi for a second. You mentioned it. By close of play Friday, having unveiled this new EV, a surprise entrant to the EV market, they had 89,000 orders, 90,000. I'm sure it's bigger now. See the reaction when Asia markets opened after the holiday weekend. Really curiously, there's a lot of evidence that in the Chinese market, consumers were putting down the refundable deposit and then cancelling just for the prestige of saying, I ordered a Xiaomi, and then didn't follow through with it. Interesting if it actually ever materializes. This is Bloomberg Technology. We took another bite out of the apple in the first quarter. Shares are coming off their worst quarterly performance relative to the S&P 500 index in over a decade, with the company raising more than $300 billion of market value in 2024. The 12% drop since the start of the year is paying off for short sellers, giving them an incentive to unwind their bets. Now, it could be the time to buy the dip. That's according to technical analysts who argue Apple's flirting with levels where bottom feeding could come soon. Apple looking cheap to some of the ever mega cap tech names on a relative term. The key support level to watch for, $165 a share. Will that be enough to entice you dip buyers? If you're one of them, hit me up on X, LinkedIn, Instagram, wherever, social media, you know where to find me. Caroline.
Meanwhile, let's just go a little bit broader than Apple and see what's been helping lead the charge on the broader benchmarks and what's pulling away a little bit. Jim Jennison, Technology Fund Portfolio Manager, Erica Clowes with us. We're so pleased to welcome you back to the show. And while Apple's been having a few tough times, as has Tesla, let's just focus on where still dines out. And super microcomputer up more than 248%. Nvidia still up 79%. You're a holder of chip names. People have questioned how far they've run. Do they still have further to go?
You know, at Jennison, we always take a longer-term view, and our view remains very constructive. When we look out over 3-5 years, we still see extraordinary opportunities for penetration of AI, and that is really broadening out in its applicability in industries. So we still are very constructive.
When you say broadening out, does that mean you take money off the table from the winners that we've seen, the NVIDIAs that I mentioned, and put it into industry groups that now benefit from AI, or do you have to do both?
Our view is you have to do both. There are the core experts in compute, led, of course, by NVIDIA, which I believe is a core holding to own for a long, long period of time, and also advanced micro devices. But the very existence of parallel compute or accelerated compute is creating opportunities throughout various industries, whether it be energy, whether it be for other semiconductor companies, whether it be for healthcare. So we're really looking at a broad base of opportunities for these companies to address.
It's been really interesting in the show for probably almost 2 years, speaking with investors who are basically ripping off the paneling of a server design and learning what's going into it. You know, now a name like Micron is starting to get credit. At GTC, we can get into GTC and all the fantastical things that Jensen said, but he was slapping Michael Dell on the back and saying, oh, if you need a server, this is the guy. Is that your kind of approach? How the compute gets built in its entirety and then work out the component providers and invest in those?
So this is such a great question because on one hand, the very essence of compute, how compute is done, has changed. The demand for memory, as you talk about, the demand to be able, the demand created for distributing power, generating power, dealing with power, thermal envelopes, for example, are all changing, and that's creating extraordinary opportunities on the infrastructure side of the business that we're very interested in. On the other side, the actual advent of accelerated compute has applicability to everyone from smart cities to healthcare applications. We're looking at things like drug discovery, medical imaging, sequencing as being enabled by the advent of accelerated compute.
Here we are, and we led you to it, but we're talking about markets and the tailwind that is AI. That's top of mind. We're not talking about rates. We're not talking about concerns of global economic strength. We're not talking about geopolitical headwinds. Why?
I think the interesting thing to think about is that this technology is disruptive to literally every single industry. So while there are always going to be cyclical concerns, whether it be one specific geographic region is slowing down or perhaps pressure of inflation or interest rates, at the end of the day, what we're seeing right now is literally every single industry being disrupted by the advent of AI. And so I think that discussion happens not in a vacuum, but it probably drowns out to a certain extent some of the more macro concerns.
I want to talk, we just mentioned that we're not talking about geopolitical tensions. I want to weave in the ongoing geopolitics that is China and US, because it does affect a lot of the chip names that you hold. We're actually just getting breaking news that Xi Jinping, leader of China, and indeed President Biden, have held phone talks. Xinhua, which is a local news organization over in China, has been reporting this. No real details on the phone talks and what indeed was discussed, but China's official news agency reporting that President Xi has spoken with President Biden of late. Now, we know within that context is the fact that US has been limiting sales of US chips to China, worried about the application of such technology in China. Has that worried or in any way changed your opinion on how much to go into these some names that are exposed to China, NVIDIA being one of them?
So from a semiconductor equipment perspective, those U.S. companies that sell equipment to make chips, they've also been banned from selling their most advanced equipment into China. I think that at the end of the day, what that does is it forces semiconductor companies to look for locations outside of Taiwan, outside of China to build. And what we've seen is an unprecedented amount of government support around the world to build more semiconductor plants. That's a great tailwind for semiconductor equipment for years and years to come. Layer on top of that, that the semiconductor chips themselves are becoming more semiconductor equipment intensive. This is a long time tailwind for the industry going forward. On the semiconductor side, as you say, what we're finding is that where there's a will, there's a way. People want to have the compute. So it may take place in different geographic regions, but the ultimate necessity is there and driving the demand for NVIDIA beyond even what we had thought 3 months ago.
Caroline and I have no problem talking about semiconductors all day long, but there are other things out there. I mean, we're going to talk about the Rubrik IPO later in the program. How do you feel about software, cybersecurity? You know, there must be more opportunity out there in the world than beyond a GPU or a combination of CPU and GPU.
You know, right now, I think that there's extraordinary opportunity for apps to be developed to take advantage of this compute. And so basically, what we're seeing is a scramble, an incredible innovation on the software side to be able to analyze big data, being able to sort through huge amounts of data and then make sense of it so that companies can understand consumer patterns, the progression of certain certain diseases, even modeling out how drugs may behave as they're developing them. So the software is very, very critical in this in this process. Not to mention the cybersecurity is an absolutely essential part of this too, because this is at the core, the company's, whatever company it is, best assets. That intellectual property must be protected. And that's why cybersecurity is also seeing such a strong backdrop of demand.
Protect the data at all costs. PGIM Jennison Technology Fund Portfolio Manager Erica Cloud. It's great to have you back on the program. Thank you.
Time now for Talking Tech. First up, Elon Musk's Starlink. Well, it claims that its rollout of high-speed internet in Italy is being obstructed by Telecom Italia. It's the country's largest phone carrier over there. There's possible repercussions for its services across southern Europe and North Africa. Meanwhile, well, the US is asking South Korea to adopt restrictions on semiconductor technology exports to China, similar to those that Washington has already implemented. It's another sign, of course, that the Biden administration is stepping up its efforts to thwart Beijing's chip ambitions. Meanwhile, Japan has approved as much as $3.9 billion in subsidies to chip venture Rapidus. It's committing more money to its ambition to catch up in semiconductor manufacturing. Now, the economy minister, Keen Salto, said that the additional funding will help Rapidus buy chip-making equipment and also develop advanced back-end chip-making processes. Ed, what have you got?
What a name. Catching up in chips, and it's called Rapidus. Let's turn to the IPO market with Rubrik, the cloud and data security startup backed by Microsoft, filing for an IPO with size and price of the company's planned share sale to be disclosed in a later filing. But the person that broke the story first time around, Bloomberg's Katie Roof, joins us now. I think this is an IPO in the technology space, based in Palo Alto, well known, backed by Microsoft. We care about it. Tell us the banks, tell us the size and scope of this one.
Sure. Yeah. No, we've been looking into this one for a while. They were supposed to go public last fall, and then they delayed it. And I broke last week that the filing was coming any day now, and it came. So yeah, this is one that's backed by Lightspeed and Greylock. They both were the top shareholders in the filing. As you mentioned, they're also backed by Microsoft. There's a lot of interest in this one. It's only the second enterprise software company to go public since 2021. We had Klaviyo last fall, and now we have Rubrik. This one is, of course, very different. This is data security, but they have, large enterprise clients. They have clients like Goldman Sachs, and then they also have, public sector clients like the state of Utah. They have a pretty wide list of clients, and they're going to be testing the market to see how things are.
And the market has to digest the fact that it's still loss-making.
Right, it is losing money, but as Jason Lemkin, a top enterprise software venture capitalist, pointed out on Twitter, its ARR is growing significantly. The annual recurring revenue, this is a metric that enterprise software investors care a lot about because it suggests that the customers are renewing their contracts and that they're going to continue to get more customers, that they have a high retention rate. So, depending on what you look at, if you care about profitability, no, Rubrik is not profitable, and their overall revenue is actually growing pretty slowly, but, ARR is up significantly.
Well, Katie Roof, we thank you for some of the devil in the detail that got released last night. Welcome back to Bloomberg Technology. I'm Caroline Hyde.
And I'm Ed Ludlow. This week in New York City. The story of the markets, at least in this session, is strong economic data around the world, pushing us to believe that central banks all around the world will keep rates elevated for longer. That's kind of the story. You see Bitcoin participating in this risk-off mode alongside the NASDAQ 100. The kind of individual story we've been talking about all day is Tesla. It's down 5.5%. That will have a big points drag on the major indices, including the S&P 500. And frankly, this was the worst deliveries miss for Tesla on record relative to the consensus. You've got to go all the way back to the end of 2022 for the last time they delivered vehicles at that kind of 350,000 mark. It was 386. This time. Rivian also lower, even though it beat expectations. All in all, higher rates seems to be the story around the world of technology right now.
Meanwhile, we would just want to return to some of that breaking news we had earlier. Bloomberg has indeed confirmed with the White House that President Xi of China and President Biden of the United States had a phone call. It has indeed concluded, and indeed it's the first time that they've been talking directly since November when they met in California, remember. Now, there's a whole laundry list of things they could be talking about. We understand from our perspective here on the technology show, there's going to be a lot about cyber, a lot about AI. There's also going to be, of course, from what we understand, progress being made on discussions around fentanyl in particular. US President was expected to urge more efforts to combat fentanyl and, of course, its approach here into the United States. China's cooperation is also being sought on a multitude of geopolitical concerns. Ukrainian war, of course, Middle East turmoil in particular. So we understand after these particular communications, these are what are being discussed and being in particular focused on. But we'll have a lot more for you in a moment as to what exactly was being discussed on the AI and cyber front as well, not to mention chips. But for now, let's return to an interesting story for an investor perspective, because Do Not Pay is an artificial intelligence company that offers online legal services. It's become one of the first private venture-backed companies to pay a dividend to those shareholders. It's all because basically it's profitable. What else is it going to be doing with its money? It's actually got more money than it raised from these VC names. Let's talk about it with Joshua Browder. He's Do Not Pay CEO. And Joshua, why give money back to investors? I feel that's a very unknown thing to do in the world of VC-backed companies.
I think investors and employees are tired of money-losing companies. And we're in a really interesting time right now where AI means you can build big businesses with very few staff. So in our case, we only have 7 employees and 7 contractors, but hundreds of thousands of paying customers. And so we want to build a big business, but we also realize that the purpose of a company is to do well by its stakeholders, and it's nice to give some money back to our earliest believers.
What does that look like? Give me size and scope on the divvy. And if you have more money in the bank and profit than you raise from VCs, give me those numbers as well.
Yeah, so the dividend, our Q1 dividend was in the middle 7-figure range. Do Not Pay as a whole has raised 24 million in total. So it's quite a sizable portion of what we've raised that we have in profits every year. And we're not resting on our laurels. We're thinking big. Sam Altman said that there can be $1 billion company with just 1 employee. And we don't think we're close to being there yet. As I mentioned, we have 7 employees. But with AI, you see companies like Klarna, where they've replaced 60% of their customer service workload with AI. Companies like Midjourney, where they have hundreds of millions of revenue and only under 20 employees. So that's really what we're inspiring to be too.
Let's just talk about the models. You mentioned Sam Altman there. How is Do Not Pay built? Ultimately, when you're using AI to negotiate some of these contracts and money off for users, Are you underpinned by OpenAI? Are you agnostic?
We use OpenAI. I started the company 7 years ago when I got a bunch of parking tickets. And I realized if you know the right things to say, you can use templates to get out of them. But in the AI era, it feels like we can build much more exciting products. One thing I'm really excited about is AI bill negotiation, which we just launched. Where we have robots log into people's utility accounts and start chatting with the big companies. And what's interesting is the big companies that use AI, we use AI, and the two AIs are chatting to negotiate.
Josh, you've been coming on the show for a little while now. As we always point out to our audience, you are not a lawyer, but basically the original premise of Do Not Pay was to use an automated service to challenge everything from sort of parking fines to bill disputes. How is the business growing? Give me kind of volumes, numbers around bills that have been successfully negotiated on Do Not Pay. How many of your proceedings have gone onwards to court, for example?
So Do Not Pay is all about helping people jump through hoops that they don't have time to jump through. So no one has time to wait on hold for 4 hours to save $12. So a lot of these cases, the squeaky wheel gets the grease and they don't go to court. We just send these letters to these companies and you get the refund. And we've won over 1 million tasks and cases for our customers over the past 7 years.
Do Not Pay CEO Joshua Browder. Great to catch up on the program. Let's get right back to that breaking news. President Xi of China, President Biden of the United States have had a phone call. The call's concluded, according to the White House. They spoke Tuesday, the first one-on-one communication since meeting in California last November. Bloomberg's Enda Curran in Washington, D.C. with the details. This is Bloomberg Technology, so there is an element of this conversation about the technology sector. What is the must-know about the conversation between President Biden and President Xi?
Well, as you say, first of all, the first time they've had a one-on-one since November. The White House briefing suggesting it's kind of a progress check-in in terms of where things have gone since then. The main points coming from our colleagues at the White House is that they spoke about the counter-narcotics trade. Of course, that's the topic of fentanyl, which is central to what both presidents have been discussing. And then there was a broader discussion around China's role in playing for stability in the Middle East, using its leverage there, and of course China's role when it comes to the war in Ukraine. Now, the whole broader point of this call speaks to the idea that both sides are continuing to try and stabilize relations. There are areas of cooperation, for example, in AI, as you mentioned there, but the focus of the call in terms of the details so far seems to have been both on security and on the counter-narcotics trade.
And there's a whole list of things that they could have talked about that perhaps would have more ramifications on the economies as well. I mean, you say that they're working to try and find at least security and guardrails around AI. But at the moment, we were just talking how at the moment the US is leaning on South Korea to stop them exporting so much of their chip equipment and technology to China. How much is technology at the heart of a conversation here or not?
Oh, it's very much the elephant in the room. As you say, the call is about stabilizing relations, but that does not mean the competitive strategic edge has gone away. And of course, the point being there, export controls, investment controls, the race for the US to get back in the game in terms of chip production and EV production and everything else. None of that has been changed or will be changed by this phone call or any other. This is about basic communications. Remember, it was only a year ago, actually, there were no communications between the two governments after the balloon incident. So it's just all about getting the basic guardrails in place. Don't forget Treasury Secretary Yellen, of course, among the officials going to Beijing. So no major progress from this. The technology race story hasn't changed. It's just about keeping things on an even keel.
Diplomacy at the heart of it. Enda Curran, we thank you so much for bringing us the latest on the Xi-Biden conversation. Coming up, look, we're going to go back to the private sector world for a moment. Atomico partner Laura Cunnell is going to be joining us. What Atomico's investment outlook is, where they've been placing their bets. She's got real expertise in artificial intelligence. This is Bloomberg Technology.
Tiger Global gathered about $2.2 billion for its latest VC fund. But here's the thing. It was well short of its $6 billion target. And it's the smallest fundraising haul in roughly a decade. That's according to Bloomberg sources. Let's bring in Bloomberg's Hema Palmer, who broke that story. When I think about the raises they've done, the affectionately known PIPs, they've had no problem in the past. They had a problem this time.
They had a problem this time. And admittedly, it's a very difficult fundraising environment, but this is certainly a pivot from the way we think of Tiger Global and their epic fundraisers. In the past, their last fundraise was nearly $13 billion big. Every fund has been essentially bigger than the one before. So this is the first time that a Tiger fund has not raised more than its predecessor.
And this comes in the context of some bets that went bad.
Yes, a number of things. Some of their bets haven't been working well. They've been marking stuff down. The environment, a lot of funds, venture funds have been feeling markdowns a lot. You're seeing, when it comes to allocators to these funds, in some ways their hands are tied because private equity has been slow to give back distributions, so they have fewer dollars to put to work. And then venture's been challenging, as you're well aware. So it's been a tougher space.
But you mean the fundraising environment generally for all firms?
Yes.
I mean, this story was incredibly well read, and one reason it's cool is you kind of get like some insight into what's happening at Tiger Global.
Yeah.
There's insider money. There's the LPs that are external. There's pressure from all sides. Just give us the juicy goss.
Yes, so the juicy goss. So essentially, when we look at the history, the past few funds that Tiger has raised, insiders have given about 10% of the assets. What we're seeing with this fund is that insiders are actually forking up about 20% of internal assets for this fund. So 20% of fundraised assets. So what that means is the money they've raised from outside investors is less than $2 billion, and they're putting up more of their own cash. Typically, I will say, though, that Tiger insiders do make up the biggest investors in traditionally most of their funds.
Well, it's about aligning in terms of your end goals. I'm sure Hema Palmer is a brilliant scoop, came out late yesterday, and we're so pleased she joins us today on it. Meanwhile, let's just stick with, well, the venture funding environment, how hard it is, where the money's being allocated if you've already raised. VC Spotlight time with Laura Connell. She's partner at Atomico, currently holds $4.5 billion in assets under management. And in fact, you've been allocating some of that money. You recently led a $58 million Series C funding for a telehealth company called Plago. And this is about cognitive behavioral therapy to help treat addiction. It's really interesting you come on this moment, Laura, where we've just heard that there's a conversation at the highest levels between President Xi and President Biden about fentanyl. So emotive, so high on a political agenda, health agenda for many. Why is telehealth the right thing to back?
Absolutely. Look, as you've said, it's a hugely emotive and hot topic going into these US elections also, and quite rightly. Unfortunately, substance use management is an area that continues to be poorly served. And so one of the things that we spent a lot of time figuring out was what the right type of solution was. And we found it with the Pelago team. We were lucky enough to back an exceptional team there of initially a clinician-led team founded in the UK that relocated to the US, which really set out to address broad-based substance use disorder management, so anything from tobacco and alcohol to opioids. And what we found is that the optimal solution, and what they found was the optimal solution, was this combination of CBT and digital content together with medication-assisted treatment. Now, the most important thing about it is for it to be clinically validated with clear ROI from an employer perspective. And I think, just to throw a couple of stats out, it's estimated that at least there's one individual in every American family currently suffering from some kind of addiction, which is a shocking number. Around 70% of those individuals are still in the workforce. Around 10% of the total workforce self-reports a substance use disorder or addiction, and only 1% of the total workforce currently has access to clinically validated treatment. So, the numbers are shocking. The total estimated direct cost of substance use disorders is around $35 billion in the US, and that's only the direct cost in terms of healthcare, incremental healthcare costs. So, to say that we're in urgent need of better solutions is an understatement.
Laura, it's interesting that you are finding this particular case to want to back. I mean, you're someone who has a lot of expertise in the field of allocating towards artificial intelligence, the hot topic at the moment. I'm sure in many ways this is AI driven, but I'm interested as to what the competitive landscape was to allocate to a company like Pelago or any company right now. Are you finding that there's a tougher time to be writing checks? Is there too much competition?
Yes, it's been really interesting to watch this market and to be in the market, particularly over the last couple of years. What I think we can say about it, safely say, is that there's been a lot of later stage capital, be it corporate venture investors or perhaps non-specialist venture investors, including family offices, that were very active in the market in 2021, early 2022, and that have cleared out of the market. Now, that's not to say that competition has decreased. In fact, that reduction in capital supply has also been met by a smaller pool of very high quality companies coming to market. A lot of companies that perhaps have struggled more not coming out to market to avoid getting priced, and so for the very high quality opportunities, it's still pretty competitive, as it should be. And I think it's no bad thing for investors also to be forced to kind of show their wares and the kind of value add they can provide. And I think the last thing to say about that is, given the cost of capital has increased to the extent to which it has in the last couple of years, firms that can actually help founders avoid mistakes and who understand the shortcuts, i.e. who have growth acceleration teams or big operating platforms and expertise, that has very meaningful incremental cost saving or indeed revenue uplift that we can provide with less of the burn. So I think an all-round more discriminating market in principle. Of course, there are a few areas where hype is notable, as you've already discussed several times in your show today.
So how do you discern hype from real? I've been going to a lot of these hackathons where venture partners are getting hands-on with, even at the code level, a piece of software before they're investing. Did you do that with Pelago as an example?
Yeah, so look, I think Pelago in particular is an example of, having deep expertise and a right to win in a given sector. So here in particular, this team of ex-clinicians who have the medical knowledge and expertise, and then can combine that with commercial know and technical sophistication. But the more general question you're asking around how we get comfortable in AI in a market that's moving this quickly is that we really have a deep pool of technical talent and experts that we also lean on to help us stay up to date, and so that we're moving in our understanding at least as quickly as are the best founders. But that's one of the tough challenges in this market, that there is so much noise. And so I think the best defense against this is really just to be, to have the humility to know that often, people and investors can grossly overestimate near-term performance and underestimate long-term potential value creation. So in summary, I would say we're trying to take our time investing. We lean on the experts, and we have a big dose of humility here as we invest.
Laura, what's the direction of travel right now? Are you chasing after potential portfolio companies, or is your desk just piled high with pitch decks?
Yeah, look, I think the best part of the job is speaking to fantastic, exceptional founders who are trying to build incredible companies. So look, we still get a huge amount of inbound, and that really is, as I said, the best part of my day. So look, there are two parts of the job that we stay focused on. One, of course, is staying as close as we possibly can to the founders that we've backed and to be true partners to them, and that does require a lot of time and commitment and effort, of course, particularly in this trickier macro environment. But of course, we're constantly sourcing, constantly speaking to people we think are going to be the next leaders in whatever market they're operating in.
And Tomoko, of course, born out of the wealth from Skype and a real pin-up in the European area. I'm interested as to the companies you're backing. Are they European-based? You just mentioned how, the one the telehealth company moved to the US.
Yeah, absolutely. One of the things we do as a firm is we release every year the State of European Tech Report, which is the industry standard report for all the activity in European tech. And what's been really interesting is if you take something like AI, for example, the really is a paradigm shift in technology. Around 33% of total funding last year in AI/ML went to European-based companies. And so we really believe in the European opportunity. That was really the genesis of our founding when Niklas Enstrup founded Atomico. It was on the premise that the best founders can come from anywhere. And if the leading indicators in terms of funding are anything to go by at the early stage, we fully expect that we're going to have an absolutely extraordinary generation of European-based founders. So we are focused on Europe as a home court advantage, but we also recognize that we want to keep the optionality to invest on a global basis as well.
Atomico partner Laura Connell, it's great to have some time with you out of London. Appreciate it. Another story we're going to bring you real quick. Social commerce startup Flip, an online marketplace featuring product review videos made by shoppers, has raised $144 million in fresh funding as it seeks to take on the likes of Amazon and TikTok. Led by Streamline Ventures, the funding round brings Flip's valuation to $1.05 billion, and it includes a $50 million investment from advertising software firm AppLovin. That's according to the companies.
Now it's been going viral. Google says it will delete millions of records of users' browsing activities, and as part of a settlement of a class action lawsuit. Now, the lawsuit alleged it tracked people without their knowledge. It was filed back in 2020, and it says the company tracked people using incognito browsing mode. That function basically lets users turn off data collection when using the Chrome browser, but other Google tools used, like websites like Advertising Technology, Scoop, still the data up anyhow. It's all according to the suit. Now, a Google spokesperson said that we are pleased to settle this lawsuit, which we always believed was meritless. Ed, some more?
Yes, the other story we're tracking is what's happening with Disney. Disney looks set to conclude a showdown over the composition of its board. The Wall Street Journal reporting overnight that the company is leading in its proxy battle against billionaire activist investor Nelson Peltz. That's with around half of the votes counted. An investor can change their vote at any time, but the latest name, having got the backing of the force from George Lucas and Jamie Dimon, is BlackRock, who have a 4.2% stake, almost $10 billion of Disney stock.
Important. T. Rowe Price, another key name. But look, there's not without some key names that are currently betting on the other side of things and wanting to see Peltz come to the board, or indeed the previous CFO. All of this really could go to the wire, it feels like.
Yes.
And ultimately, what does that mean for... The key concern is long-term succession planning for Bob Iger. Well, if he does lose this quote-unquote battle, and we do see Peltz join the board, is he going to stick around? That's a key question as to how quickly they have to consider some succession.
Again, as I wrote about earlier this week, if Peltz is successful, which looks unlikely at this stage, how does he change anything? I don't see many proposals.
We'll see overall how the votes still add up, and if I get any more ads asking me to do so, I'm going to go completely stir crazy. But that does it for this edition of Bloomberg Technology.
Recap the show on the podcast. It was a pretty big show, a heavy EV theme, chips, global politics, on Apple, Spotify, iHeart, and all of the Bloomberg platforms. From New York City this week, this is Bloomberg Technology.